What's up, traders? Thank you for joining me on another episode of Momentum Movers. I'm Darnell Prices. I'd like to thank you for joining me. Getting right into it, I know this probably says it's a backtesting session or a market recap, but we know what happened last week. We saw the big sell-off about 7 days ago on Sunday. Moving forward, transitioning into this week and what we can look forward to. Big news dropped yesterday. President Trump, our head of state, went ahead and announced those 25% tariffs on Canada and Mexico, I think with China on the agenda. So I'm looking for volatility on the open again this Sunday. We'll get into that a little bit later on what I feel like the possible areas to position, to take positions on gold and NQ. Also considering on Wednesday we left rates unchanged. We'll get into headline risk and macroeconomic impacts and everything that could happen with that. On that note, go ahead if you're not a subscriber. I see that over 80 to 90% of the viewers that watch my channel are not subscribers. Go ahead and hit that subscription button. Hit the notification so you could be alerted when I go live again for my Wednesday midweek video and the following weekend video. And add comments in the chat what I could do better, what you did like, any feedback you have whatsoever. Go ahead and leave that down below, and let's hop right into it. So kicking things off proper, we'll start with the economic calendar on any economic news we have coming forward. Monday, not so impactful. However, we do have the ISM manufacturing PMIs. It is a red folder event. It'll come after the session. The New York session starts around 10 a.m. Look forward to that. Real news doesn't kick off until Tuesday, starting with JOLTS. We'll also have ADP on Wednesday, and then getting right into the big news event, non-farm payrolls on Friday. So it's the normal news that you should come to expect on the opening of a fresh new trading month. Looking at earnings, we had most of the big tech firms with their news last week. This week, however, looking at Tuesday after the close, we do have AMD and Alphabet, aka Google. Followed by Thursday after the close, we'll have Amazon. So those are the three notable companies to look for news. Maybe Qualcomm, considering the China play. If we do have China tariffs, Qualcomm's news may impact Nvidia and other semiconductor chip manufacturers. However, earnings, as far as I'm concerned, is slowly wrapping up. So with that said, the big news as far as what'll set the tone for my thesis will be headline risks from the head of state, aka Donald Trump, with these tariffs. I don't think he said much about China. However, our neighbor to the north and our neighbor to the south, Canada and Mexico, he has went ahead and put those tariffs in effect. And they do export a lot of goods to the United States. I have read, and you could search it on your leading search engines, what their take, those heads of states of those countries, as far as what they plan, how they plan to retaliate. They'll either stop sending or raise the prices on goods that we consume. So you can expect to see some higher prices at the pump, higher prices on the shelves, concerning food and energy and other consumer discretionary, goods. So that has yet to be fully priced into the markets as of Friday's close. So going into this week, I went ahead and done most of the homework. I think you could look at the previous live stream I had where I got the levels from, but I'm basically looking for shorts on NQ going into this week, this Sunday going into Monday. If we could get up and I know this is probably deja vu considering last week, but if we can get up as high as the 750s, I'd be looking for it to take a short there, down to 400. I think this range between 750 and 400 is more of a neutral zone, so it's more of a landing area. We can see two-sided trade in this area. Let me change that to yellow. If we get above 750s on any of these rally attempts and build structure, I could see that for a potential for the long trade. That is on the table. I'm not trying to stage a single directional in my bias. And you know, while I would like to take shorts below or at or around the 750 level, if we break, if I do catch that short and we break 400s and retest and keep going, then getting down to 400, if depending on how volatile it is, will be a good place to take some off, but leave a runner, because targeting last week's low or Sunday, early Monday's low on last week's candle, that is not only a good target, but a good place that if we're going to have a meaningful sell-off to show continuation. The other alternative is if we do just like we did Sunday and just dump at the open and show no signs of recovery. So again, I'll put them at the end of the video. My two levels for this week where I'll be looking to get positioned on NQ would be mostly to the bear side, only one long opportunity on a break and retest of 21,750, but mostly looking to take cheap shorts to the downside off of 750 and entertaining a trading range between 750 and 400. I am aware that that's a wide range considering futures positions at a prop firm. So it's plenty opportunity is what it amounts to. If you could get a cheap trade, take some off, ride down to the setting your TP at or below 400, it's an opportunity that may present itself over and over again, but finally looking for a break of that 400 level for a wider trading range going down to last week's low, if not beyond it. Taking a look at gold, we'll go ahead and switch right into gold. I have levels there as well. Friday's low of the red candle we had after the run up of making new all-time highs, I do see that as a potential long entry. However, and I'll get right into the rationale and the strategy behind taking that long in a minute, but as far as just discrete levels, the 28 to 27.5 level, that's a decent long entry, and to the downside, the cheapest long coming from 2740.5, right? Those are long areas where I feel like you could put a tight stop. The trading range, if NQ is range bound, would be between those two levels, right? So there are supports and resistances in between them, and like around the 2790s, another level 27,811s. You have 2772.4, and just below the low. You'd have to listen for those. The two levels, if I just had to narrow it down to just two levels to get active for the week, the most important, the 27.5 and the 2740. Below 2740, I think we have bigger problems on our hands, and you'd be looking for levels in the 2600s. But if NQ is selling and falling out of the bid, and it's at the lows, close to the lows, around 400 or around like I say, the lows, and it's building structure, like it may be range bound for a while, if not higher, I don't think I'd take that long on NQ. I'd more so look to take that long on gold, looking for higher prices. Likewise, if gold is bearish around the 2827 or below 2740, I won't look to take the short the long on gold, I'll look to take the short on the levels we just covered on NQ. So again, I mentioned it in a previous video that I do feel NASDAQ and gold do have, you know, somewhat close to a 1.0 correlation. Where they diverge, in my opinion, is the magnitude of those moves. So when one asset is bearish, I'll look to take the short in gold in NASDAQ. However, on the opposite side, when both or one asset is bullish, more so when gold is bullish, I'll look to take the long there. So I'm still holding to my bias, short NQ, long gold. However, there are caveats and nuances, being that, you know, they may trade in tandem. I'll just look to take those trades on the corresponding asset. So this is going to be a pretty quick video. I'm not going to hold you long. I know it's about 2 hours before the session opens for the week. I'm gonna go ahead and finish eating, get cleaned up, get rested, relax, go through my pre-trading prep. I may live trade, make a live stream of me trading once the market get open, but I'll go ahead and leave the levels at their normal location right here. As far as the key levels where I'd like to get active on both assets, trade well and stay safe. We have a head of state that is notorious from the last administration for coming with off the wall headline risk when it comes to positioning in these markets. However, even though, you know, you get big volatile moves sometimes on small time frame candles that engulf, you know, hundreds of candles of price action, I do think that those levels or those moments occur at significant turning points in the market. For whatever reason, we won't put on the tinfoil hat. Just watch your levels, watch your setup, and like I say, trade well, trade smart, and trade on. Donnell Price out. Also, go ahead, if you haven't already, hit that subscribe button, turn those notifications on, and please leave me a comment in the videos. You know, do you agree with my setups? Do you have, you know, opposing views? I like to hear it all. I don't want this to be an echo chamber of only what I think. If you have sound TA and it's respectable, I'll also, you know, I can't help but respect it. But yeah, hit that thumbs up button too if you like the content. See you later, maybe this afternoon or on the Wednesday weekend midweek video. Until then, trade safe, trade on.